Hello, I'm Kate Nidachin and you're on ИнстаФорекс TV channel where you can learn about the latest financial market news. Experts at Goldman Sachs and Bank of America, reputable American finance conglomerates, confirmed the previous forecasts of further dynamics of the US dollar and the single European currency. Again, they are considering the standoff between the two rivals and assessing their strengths. Like earlier, analysts of these financial institutions insisted that the greenback and euro will reach their parity level by the end of 2015. Economists are certain that minor weakening of the US dollar in the recent days will not prevent their currencies from achieving the parity. Yesterday, the main currency pair resumed a downward bias. At the early European session, the euro-dollar pair was trading at the level of 1.1290. The breakout of the resistance level of 1.1250 will strengthen the pressure on the pair. The chance of such a scenario is rather high. Today, market participants are awaiting the revised data on the US GDP growth rate for the second quarter. Last analysts shared the view that the second estimate is expected to show a notable upward revision in the GDP to 3.2% on a quarterly basis. The preliminary estimate released in July had shown the economy expanded by 2.3% in the second quarter. On the whole, the US dollar has gained 5.9% against the single European currency since the start of 2015. Such reinforcement is entirely driven by the growing expectations of the key interest rate hike by the US Federal Reserve. However, at present, the American economy is disappointing investors with the tepid macroeconomic reports. Moreover, the global economy is vulnerable on the back of the recent adverse developments in China. In case the forecast of the robust economic growth in the US comes true, investors will be encouraged by this information. As a result, it could trigger a new round of speculation that the US Fed will be ready to raise interest rates in December this year. It was ИнстаФорекс News and me, Kate Nidachin. See you next release.